Hello everyone, this is Brian Howard, BKH Credit Group. In this quick video, I want to talk about cash flow financing. Cash flow financing is one of the most popular types of business financing available. Most of the ads relating to getting business financing with bad credit and no startups is a form of cash flow financing. The two most common types of cash flow financing are merchant advance and business revenue financing. To get approved for cash flow financing, you'll need to be able to show a minimum of 6 months bank statements or 6 months merchant statements. Those bank statements must reflect that your business makes over $120,000 in annual sales, or roughly about $10,000 per month. Now, with merchant advance, you can actually get away with only $5,000 an average monthly revenue in the forms of credit card sales. Now, your business will need to be in business for at least a year in order to qualify for cash flow financing. You'll need to have 10 or more transactions per month into your business bank account, and you must have less than 10 insufficient fund charges or statements in your bank. You should have some sort of balance left over at the end of each month as well. Now, the terms that you can expect on a revenue lending or a merchant advance. Revenue lending and merchant advances are short-term loans, generally 6 to 18 months. Loan amounts can range from $10,000 to $500,000, and the loan amount equals 8 to 10% of your annual revenue. So let's just say, again, using the previous example, you did $120,000 in revenue. Your loan, and let's just say they took the loan amount equal to 10%. 10% of that would be $12,000. So you would be looking at a $12,000 revenue loan if your business was doing $120,000 a year. You can expect the interest rate between 10 and 45%. That's just going to vary from lender to lender, and then just based on the strength of your bank statements. And you can get this financing with as little as a 500 credit score. So, I mean, a 500 credit score represents probably less than 10% of the population. So almost every business owners will qualify from a credit standpoint. But the higher your credit score, the better term you will get. That's a key point in listening to what I'm saying. Your credit does not determine whether or not your personal credit rather does not determine rather, I should say, whether or not you actually get the loan, but it will play a factor in what interest rate you get. And even if you don't get the best interest rate to start out or a favorable interest rate, you can always take the revenue loan, pay it off early, then go back to the lender and reapply for more money, and then get more favorable terms. But as stated, you should expect about a range anywhere from 10 to 45%. Now, there's no collateral requirements for cash flow financing either, so that doesn't mean that means you don't have to put up your house or your car or the equipment that you own for your business or inventory or anything like that. One of the great benefits of cash flow financing is that personal credit is not really a factor in whether or not you're going to qualify. You can get the money fast, and you can get the money in as little as 72 hours. The main thing is you just need to have your bank statements that reflect that $120,000 or more annual salary. Approval is easy.